Pleasure.
When you look at the world, it looks a little bit more uncertain than it did 6 months ago. This was the main thrust of your speech. Why?
We see the baseline as slightly lower, but we also see what we call downside risks, a bit higher on the horizon, and we don't see much by way of upside. So we believe that these three key risks that are China change of business model and as a result lower growth, the lower commodity price for longer, and the tightening of financials as a result of new monetary policies that has just begun and more probably will come out too as the three key factors. That's on the economic front. But then on the top of it, we see also some very concerning geopolitical threats that have an economic impact on many countries around the world.
And then we have, of course, I guess, folding both is Brexit. Is that in your top three risks for this year?
Well, it's clearly part of the uncertainty that we have at the moment, particularly in the European Union and concerning the financial sector as well, because of the size of the financial sector that London represents.
You talked about China, and we're concerned about the debt load there. We're concerned that actually, despite all of the central bank action, we're still in this no growth or very low growth economic rut. Are we sowing the seeds for another recession, or are we looking at a shock?
No, I wouldn't say that China has no growth. You know, we forecast China at 6.5%.
Really?
It's really something to write home about. If we had more of those countries
That's more
with
the debt burden
that.
I was talking about.
But we see the Chinese authorities as being determined to tackle some of the fragilities of the system. And you know, when all leaders come out to reinforce the fact that they will restructure the state-owned enterprises, which are clearly one drag on growth, particularly in that change of business models. You don't need as much iron, you don't need as much construction, you don't need as much of the heavy-duty manufacturing work that had been done for decades in China. So that is a restructuring which will imply a lot of hard work, a lot of manpower being retrained, hopefully, and it implies a lot of balance sheet revision that will have an impact in the longer term. But in a way, the fact that China can produce those spillovers around the world, it's a bit of a badge of honor of being part and a critical part of the globalization of the economy.
You don't worry about recession, though? Even if all the concerning news were to come true, either on the geopolitics front or the political front?
You know, what we fear is this sort of very new mediocre that I have warned about last year, which would mean, weak growth, no new jobs, no higher inflation, still high debt, all those things that should be low and that are high, continuing that trend. So we call for policy actions, and we call for what I have named the three-pronged approach, which combines structural measures, fiscal policies, and monetary policy. So the three together, not just one after the other. We're seeing a lot of monetary policies at the moment, but we need the three, and we need it fast.